Welcome to another Selective Wealth Management video. In today's video, we're going to be answering the age-old question, how long will my retirement savings last? We're going to walk through a basic calculator covering each one of the inputs so that you can use it for your situation. However, it's very important to note that this is a rough estimate and it can generally be improved based on capturing planning opportunities that are unique for you. So without further ado, let's dive in. All right, let's take a look at our calculator here. How long will my retirement savings last? We have a few inputs that are here on the left-hand side. We're going to cover each one of those. And ultimately, the question here is, how long is your retirement funded? And you can see here it has a answer in number of years and months. In this case, the 99 years, 12 months. That is an output for if your account is actually growing. So you'll see that depending on your inputs for a variety of these. So let's go ahead and start here. On the left-hand side, you're going to input your cumulative savings. This would be things like checking accounts, taxable brokerage accounts. It would be IRAs, any type of retirement plans that you have. Things that you would not include unless you plan to sell them would be illiquid assets like real estate, etc. You don't need to include the value of those here in this input. So let's say we're going to do a value of $500,000 for total cumulative savings. The next input is your total monthly spending. This includes everything: mortgages, insurance, dining out, every budget item. For this, we're going to do $6,000 a month because I think it'll make for a bit of an interesting result. Next up, you're going to apply your income. The first item is Social Security. If you do not know your Social Security projected payment, you can go to ssa.gov and register, and there's actually a Social Security statement for you that you can use to get this number. The timing of your Social Security is really important. We have a separate video on that in terms of when should you claim. We won't belabor that point here, but what you want to do is type in your Social Security amount here. Let's say it's $2,200 a month. Any monthly pensions you're receiving would go here. Another important point to pensions, again, this is a basic calculator. Things you'd have to check are if there's survivorship rights to your pension. So if you pass away, does your spouse receive it, etc. But for now, we're just going to type in your basic pension amount, particularly if that's for life, then that's fairly accurate for the life of you and your spouse. Then you want to type in your net income from other income sources. So we mentioned you don't put the value of rental properties up here. But let's say you had some rental properties that were bringing in $800 a month for you. You would input that income here under the income amount. Now I'm going to introduce a concept here that's relatively important. We have $6,000 in spending per month. And you can see we have $3,000 in pre-tax income. After you pay taxes, the difference between your monthly spending and your income amount is going to be how much you need to draw out of your accounts. That draw rate in general, you want it to be less than 4% of the total cumulative savings on an annual basis. So if you're drawing $40,000 per year, you want to have about $1 million in savings. That's a ballpark back of the napkin approach, but it's generally very valuable. They call that the 4% rule. Now, scrolling down, we have a couple of other factors here. You input your rate of return on your investments. That would be the $500,000 of cumulative savings here. So whatever you think you're going to earn on those investments, the rate of inflation, and your marginal tax rate. For here, we're actually going to do a marginal tax rate of 22% for this particular income earner. Now, once your inputs are all done, you can see here a graph that shows whether your assets are declining or increasing. In this case, they are declining, which is why I had the monthly spending set to where I did. And this lasts 14 years and 1 month. In general, it just feels a lot better for this to be flat or increasing. So if you're interested in figuring out how much you need to retire, you can adjust this cumulative savings amount until the projected retirement funding is a comfortable number for you. If it is increasing, let's say this were 1.5 million, you can see now we have a situation where the assets are actually increasing on an annual basis. So that's why it says 99 years and 12 months, and the actual account value or retirement savings balances is increasing over this 100-year period. Now, It's important to note that let's say you did have $1 million saved, and this is your current spending projections. We have an increasing situation here for 20, 25 years. This is a very rough estimate and a very simple calculator. There are a lot of financial planning opportunities that can be applied to your situation to improve the outcome. For example, the timing of when you take Social Security can impact this monthly payment and impact how long your savings last. Things like avoiding IRMA surcharges on Medicare or Medicaid, Roth IRA conversions, and hundreds more can improve the outcome for this. So this is just a rough estimate of how long your retirement savings will last and a brief explanation of the inputs so that you can utilize this calculator yourself. So that's it for answering the age-old question, how long will my retirement savings last? And that's just a basic overview. There are hundreds of planning opportunities that we can apply to a financial situation to hopefully improve that outcome. We actually do this on an annual basis for clients through a checklist approach. If you're interested in seeing our comprehensive wealth management strategies applied to your situation, feel free to schedule a free consultation today.